This is Pete Moore, Halo Talks Fast Break, coming to you with recent news on the EOS transaction, which was sold from BRS Capital Partners over to our friends at TSG Consumer. The deal will close in a couple months after it goes through regulatory approval as well as lease assignments. Congratulations to the entire team there. Our good friend Bob Giordina, Bruce Bruckman, Rashad, Rich Drenberg, and all the crew at EOS for the success they've had. Let me give you a little history lesson on what happened to go from 17 clubs to the map that was on the screen just before. Okay, they've gone up to 175 locations in a tenure of 10 years. Okay, 10 times the amount of locations. Now, the interesting part of this transaction, it was owned by a Gold's Gym operator, good friend of ours, beloved Brad and Wanda Nesty. They did a great job of creating the HVLP 2.0 of the Southwest. And we helped them sell the company. And the group that prevailed was Bruckman, Rosser, and Sherrill, with equity also from a group called Performance Equity, which is one of their largest equity limited partners. That deal was done in January of 2015. We had to break the Gold's Gym termination of the franchise agreements, which cost several $1 million. Because when you buy a chain of clubs and you don't want to pay franchise fees, you have to go and basically pay upfront for all the franchise fees on revenue that would be due, as well as 150% of what the ad fund would be calculated to be. So January, the clubs are called EOS, which was a name that Bruckman, Rosser, and Cheryl Bruce Bruckman came up with, which in Latin is the dawn or the rise. And the Gold's Gym signs came down once they got a wire to get their fees, which is basically ransom for taking down their brand. Our partner on this deal, Dave Zalkowitz, did a lot of work. Chris Jacob did a lot of work. And our beloved retired partner, Richard Pyle, who is currently in retirement. And I hereby want to say to his family and his wife that we're trying to officially take him out of retirement and bring him back to Integrity Square. Now, the deal was rebranded to EOS. They were in California, Arizona, and Nevada. The way to prove out a business in order to get equity value is to get into other states and prove that your prototype, your box, your unit economics actually work in different cities, in different household incomes, and move into areas where you know that your prototype is going to be successful. As they continued to grow and brought on Rich Drenberg, good friend of ours at the Square, who used to be at Gold's Gym LA, one of the top guys in the industry, took the helm of EOS, and they started moving into Texas. They started moving into Florida. They started to align with Bob Giordina, who used to be the CEO and COO of New York Sports Clubs, which subsequently, prior, was also a BRS portfolio company for many, many years on its successful run over several recapitalizations of the company. Now, as a company grows and as they prove out their business model and their average unit volumes and their profitability, who comes knocking at the door? Real estate developers, because they know that these guys have a box that's proven, has KPIs that work. And you know what else they're going to do? They're most likely going to pay their rent, and they're going to pay it on time. So real estate groups line up to say, hey, I'll build an EOS for you. Okay. You put in the equipment, I'll build it out for you, but give me a 10 or 11 or 15-year lease so I can at least monetize what that investment is for me. So EOS started to grow, not off their own balance sheet, but basically off the balance sheets of real estate developers. And that is the key to success in the health club or any bricks and mortar when someone else wants to fund your build out. Obviously, they probably took out debt. I know they had Scalable Capital in there. And then my good friend Brian Smith and North Point, between Piper Sandler and North Point, was able to sell the company to our good friends at TSG Consumer. And the thesis was, hey, let's take this company and go from 175. They published 250. I think they're going to go to 350 in the next 3 to 5 years. And EOS is most likely a candidate to be an IPO business and a publicly traded company in our HALO, Halo, Health, Active Lifestyle, and Outdoors segment. So congratulations to the team. The story behind the story that people need to know is that the reason why you get a high valuation and you get someone to pay $1.5 billion for your business when you have over $100 million of EBITDA is because you have proven that you could grow. You have proven that you can execute. You have proven that you have the team and infrastructure and vision to continue to innovate as well as backfill. Keep your boxes fresh, keep them clean, and get 8,000 to 15,000 members per club. I don't know the exact numbers, but I know that they're very strong. as people move into the Sun Belt, continue to do that, EOS is going to be a beneficiary of that. And when an EOS comes to town, watch out because they've got a killer business model. It's a killer experience. It's a strong brand. And they are one of the bellwethers in our industry. And I hope they will be for the next several years. So congrats to the entire team. Congrats to the buyer and seller when this closes in a couple months. Shout out to Bruce, to Bob, to Rich, and to Richard Pyle. We expect you back in the office shortly and return to the office and return to work. Good to see you. I hope this fast break helped understand why you build a business that's valuable, grow it by 10x, and get paid for the value that you've created. Have a good weekend. PD Mo over and out. Checking in from San Diego, Fit Social. And we'll catch up with you next week when we do a tour of what the Fit Social guys are doing with expanding their business from a health club to a social to a lifestyle brand that is getting a lot of press in San Diego. Over and out. PD Mo. Bam.